In recent years, private equity firms have been making quite a few acquisitions. As we can see from this graph, the top 50 alternative asset managers in the world made 25 strategic acquisitions in 2021 and 18 strategic acquisitions in 2022. That's 43 strategic acquisitions made by 50 firms in the last 2 years. Now, why would an alternative asset manager or a private equity firm want to make strategic acquisitions? Well, I'm happy you asked. In this video, we will talk about the 3 main reasons why alternative asset managers are making acquisitions. They are to get exposure to additional asset classes, to get access to capital, and for geographic expansion. After that, we'll end the video with a final thought. So let's get started with additional asset classes. Back in the 1980s, private equity firms' primary strategy was to conduct leveraged buyouts of private companies. Over the years, private equity firms have evolved when it comes to adding value to private companies. These firms have many different strategies that now focus more on operational improvements and multiple expansion, as opposed to just putting more leverage on a company. Also, these firms that were traditionally just private equity firms now have funds in real estate, infrastructure, private debt, as well as other alternative asset classes. So many people will now refer to these firms as alternative asset managers, and rightfully so. Now, a big way that these alternative asset managers are growing is through acquisitions to give them more exposure to an additional asset class, or to expand current asset classes by acquiring firms that have complementary strategies within those asset classes. Let me give you 3 examples. Number 1, this year in 2023, TPG acquired Angelo Gordon, the well-known private credit and real estate company. This acquisition will give TPG an expansion into credit investing, as well as offer complementary real estate capabilities. We will go into detail on the TPG Angelo Gordon deal in our September 2023 video newsletter. So please click the link in the description below to sign up for that newsletter. Number 2, in 2019, Brookfield acquired Oaktree to increase its credit offering, among other things. While we're talking about Oaktree, I want to recommend a fantastic book on investing by Oaktree founder Howard Marks. The book is called The Most Important Thing. It's a short read, but a great read. I really like how Marks explains how risk differs from volatility, even though most of the world uses volatility to measure risk. And number 3, in late 2020, Onyx Credit acquired Falcon Investment Advisors. At the time of the acquisition, while both firms had credit offerings, Onyx Credit's focus was mid-market to large cap, while Falcon specialized in the lower middle market. We talked about the Onyx Falcon deal in our video titled Private Debt Firms Are Expanding Through Acquisitions. So please check out that video to learn more. Now let's move on to access to capital. Private equity firms are buying insurance companies to get access to capital. In 2021, KKR bought 60% of Global Atlantic, valuing the insurance company at approximately $4.7 billion. In 2021, Blackstone announced a strategic partnership with AIG that includes managing certain assets, and in 2022, Apollo merged with Athene in a large merger between the private equity firm and the insurance company. Insurance companies give private equity firms access to capital, permanent capital. Insurers collect money from annuity holders, which can then be used by private equity firms on a regular basis to invest in private companies. We explain this in detail in our video titled Permanent Capital: Why Private Equity Firms Are Buying Insurance Companies. So please check out that video to learn more. So let's move on to geographic expansion. To fully build a private equity business in a certain region takes time. After all, Private equity focuses on relationships. So if a private equity firm wants to expand to a specific region, a quick way to do it is through an acquisition of a company that already has those relationships. A great example of this is when EQT bought Baring Private Equity Asia back in 2022 for 6.8 billion euros. We went into detail on the EQT Baring Private Equity Asia deal in our video titled Baring Private Equity Asia Deal. So please check out that video to learn more. Now, here's a final thought. In addition to cross-selling current clients, there is a big incentive for private equity firms to grow to become large alternative asset managers. Do you know what that incentive is? Well, currently, there is a race from alternative asset managers to gain access to the private wealth channel. According to Bain & Company, half of the global assets under management are represented by the private wealth channel. And Bain says that this channel only has a 16% allocation to all alternative investments, not just private equity. Firms are starting to come out with new products that offer a diverse allocation for private wealth investors across alternative investment strategies. An example of this is EQT's new product, which offers private wealth investors access to early stage investments, mature buyouts, and real assets, all through one vehicle called EQT Nexus. Investors, if you are looking for options to enter the alternative asset space, these large alternative asset managers may have an option for you. In this video, we talked about 3 main reasons why alternative asset managers are making acquisitions. We talked about additional asset classes, access to capital, and geographic expansion. Do you know of any strategic acquisitions made by private equity firms recently that we haven't mentioned? If so, please share them in the comments below so that other viewers can learn from your post.